What is going on, traders? Welcome back to the Traveling Trader. AMC short interest continues once again as the battle between short sellers and retail traders continues. As always, I'm going to break it down for you guys in this video. We'll take a look at short interest. It is definitely rising again as short sellers are becoming more and more brazen because we have not yet seen a short squeeze. I'll explain what that means in a second. You definitely want to sit tight. We'll take a look at the volume. We'll take a look at the options volume. I try to break it down from every single segment based on the data that's available to us. Without further ado, let's get right into it. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of this analysis and what you think of AMC stock price going forward. So the short interest hit a low about 2 weeks ago on June 8th, but ever since then, it has started to climb again. We went from a short interest of about 11% to now hovering around the 14% range. Now, why is this important? And we'll take a look at AMC's chart and I'll give you a price update towards the end of the video. But the reason that this is important is because all signs point to a short squeeze not happening yet, right? It has not happened yet. The squeezes that we've seen were likely due to a gamma squeeze. There was some short covering. As we see here, shorts did decline from the beginning of June to the middle of June. However, they are starting to pick back up because short sellers, they really don't care about timing. They know, or they think, that momentum will eventually die down and that they will be able to close their shorts successfully for profit. Also, think about this. The higher that the stock price gets, the less likelihood it will climb higher. So short sellers become brazen at these high prices, and there's a better opportunity in their view to short AMC at 60 bucks than it was to short AMC at, say, $15 or $10, right? To them, it is a more realistic proposition the higher that AMC gets. That is why we see short interest climbing. So if you take a look at AMC's chart, you will see that it is consolidating here in a barcode fashion. Now, this traditionally is a bullish pattern. I'll get to that in a second, but they see this. They see the fact that the MACD is turning bearish. You take a look at volume and you see that it is actually a pessimistic picture here. We are below 200 million for the third day back-to-back, 200 million shares that is. And yesterday was the lowest volume that we've recorded since May 24, 2021, exactly a month from the date of this recording. So a short seller sees all of that and they are much more comfortable shorting here as it looks like it is a resistance point to them as well. That is why you see shorts increasing. However, here's why it is important that we keep up the volume if we want to stick it to these shorts. If you take a look back at the end of January when volume started waning. Now, obviously, there was some artificial factors going on here. If you remember, Robinhood disabled the buying of shares on both GME and AMC as well as other stocks. And so there was this artificial downward pressure that brought the stock down. But it is still important to note that declining volume is what brought the stock down. Regardless if that declining volume was artificial or not, you could see here that we were trading in the 500-600 million share range, started dropping to the 400 million share range, the 200 million share range, and then once we got to the 100 million share range, that is when AMC stock price started tanking. And then obviously we fell below the 100 million range to the tens of millions. So the relationship between volume and price is very important. One other reason why that is days to cover. So when you look at days to cover, this is what is really important when you are looking out for a short squeeze. Yes, short interest is important. The short percentage is important, but days to cover is what is really important because this tells you how fast short sellers will be scrambling to cover their positions. The higher this number, the better. Now, this is based on relative volume, right? So based on relative volume, how many days would it take for a short seller to cover their short? Right now, we are below 1. See, these hedge funds will never stop. They know that eventually the retail trader will tire out, or at least that's what they think. So they keep shorting it even as it goes up. They double down on their bets. Yes, some short positions closed. As I said, short interest did drop to 11%, but it is now climbing because of the reasons that I spoke about, the fact that AMC looks like it is at resistance. However, this here could also be considered a bullish pattern. And as I said before, when we played the breakout, when we played the breakout from the bullish pennant when it was in this shape here, I said there's usually a lull in volume before you see a breakout. Now that could be the case here. Obviously you would have to be speaking for millions of people to assume that this volume can stay up. Now in the last few AMC videos, I did tell you that the 3.272 fib level is where AMC will see resistance. We've hit this now for over 7 or 8 candles in a row, not to count the candles before the drop in the middle of June. This is the resistance point. Now let us take a look at the options data. Remember when I was talking about a gamma squeeze, I told you that a gamma squeeze was a component of options, not necessarily of stock buying solely, right? So if we take a look at the options data, you will see that the right things are happening. Now we are not seeing the same volume that we saw for last week's expiration, but the volume for June 25th expiration, which is tomorrow, is increasing, as well as July 2nd, which is next week. So if you take a look at the near the money, as well as the slightly in the money options, you will see that the volume is growing. We had 31,000 yesterday, 31,000 calls at the $55 mark. We had 47,000 calls at the $60 mark. We had 34,000 calls at the $65 mark. This is the range that you want to see a bunch of calls pouring in. Not necessarily the far out of the money lotto calls like the 145 calls. This is not going to entice market makers to buy shares in order to be delta neutral. You want to see in the money, at the money, and near the money calls being bought in large quantities in order for the market makers to then go out and buy 100 shares of AMC per contract that they sell to the market. So keep your eyes peeled for this bullish pennant here. It is still holding up really well. However, volume is declining. We do need to see an uptick in volume for this to break out. If we do break out, I'm looking at the 4 fib level. $76 is my next target on AMC if we do see a breakout. Now the MACD, I'm not gonna lie, is turning bearish. We are seeing red on the histogram for the first time, which usually signals the beginning of a downtrend. But this can be all offset by a surge in volume and a surge in call options. There are no two ways about it. The price is not going to magically increase if we don't get those two things. But make no bones about it, shorts are climbing up. We see a 4% uptick in shorts already within the last couple of weeks. They are getting brazen with it. They do think that the will of the retail trader is exhausted. They do think that the stock is facing resistance and there is likely to be a downturn. So will we prove them right, or will we keep attacking those shorts, because a true short squeeze has not happened yet? This is not financial advice. Take what I'm saying, combine it with your own analysis, and do what thou wilt. One other thing that I found really interesting that I know is a confirmation that there was naked shorts on AMC back in January. Look at the volume here for January 27th. 1.2 billion shares. Now remember, AMC's float is only 500 million. This is more than twice the entire float of AMC. Where did those synthetic shares come from? This is almost a surefire sign that there were naked shorts on AMC. If you combine that with the SEC's report for failure to deliver, meaning shares that were failed to deliver to the buyer, right? The SEC keeps track of this. You could see this spike here. This is definitely evidence of naked shorting on AMC. Now, I am waiting for the latest data to come out for June. Unfortunately, it is lagging, it is delayed, but I do want to see if we do see a spike in failure to delivers, which would mean that there is synthetic shorting going on. Anyway, traders, that is it for this video. If you want access to all of our trade alerts, we did have 100% options play on CLNE last week. We also closed our position on Wish for 70% profit yesterday. I did a video on both CLNE and Wish, as well as AMC, back on June 9th. If you missed it, go back and take a look at my analysis so that you can back test it and see how you can analyze these things moving forward. Let me know in the comment section what you think of this AMC analysis. Hit that thumbs up if you got anything out of this video. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.